Hello, everybody, and welcome back to the Traders Mind Chat live show. Today, we will be talking about stock market analysis. I'm here, hope to get through it, feeling a little under the weather a little bit. Got my green juice here, hoping to stay with it for you guys today. But market has really turned around the last couple of days. Well, why don't I share my screen here with you guys, and we could go through it. And it's really saying that the market has turned around the last few days. I think is it's been more than that. The market really started to turn around down here, right? And this is where I started to test the waters down here around maybe let me see when the most recent positions were opened. Most recent positions were opened. Just popping up my little spreadsheet over here. Let me bring it down to show you guys what we're talking about. Yeah, so first position was started on the 14th, and even before that, I started a position in ERF. So coming back over here, so ERF, it started this position back here as it was emerging out of this little consolidation area. So starting that towards the end of February, and my most recent position or the position that's then added on to that move, well, it was started back here on the 14th. So if we come back and we take a look at the index starting down here, right? And so I think that's something that's important to recognize as well. When is a good idea, or when is it appropriate to start new positions? I think that's a very good question for us to ask. When should we start new positions? I'm of the mindset that we should start new positions as they emerge, when the setups present themselves. So you can then you see a setup like this, right? Like nice and tight. Prices run up. The volume on it was heavy. It starts to consolidate and tighten up over here, and then we're looking for it to blast out. Sure enough, it does. But when you get a nice setup like this, or for that matter, if when you get a setup that is appropriate for your system and the market's presenting it to you, and you go through, you grade that setup, and it turns out that it's an A-level setup for you, then it's our job to take it. And then you could take that and use the market as a backdrop to how many things do you have in your favor to begin your analysis of how am I going to scale into this position? How large of a size am I going to use for this? Because at this point down here, the market, well, it was still in a very precarious spot where it didn't quite bottom yet. It still needed to show signs that it would follow through. So I'm taking a small position to test the waters and continue to add on to those smaller positions and grow the account that way. And even at this point over here, as the market's consolidating the past few days, or even running up from the lows, let's take a look at the S&P over here. Even running up from these lows, and from those lows, the market ran about 9% over the course of 9 days, right? So 7 bars here, so 7 trading days. That's a huge move. Right now, that there's still not a ton of setups that I'm interested in, but by way of taking smaller positions in the names that we're setting up at the time as we're marching off those lows, like I have a solid foothold to add to some of the existing positions, right? So that's some of the strategy that you may want to consider. Taking smaller pilot positions in trades that are setting up as the market is starting to make a turn, and then uh, adding to them as the market starts to pick up steam. As we're going through this, let me know what questions that you guys have. I'll just take a little sip of my green drink here. This one is called the Wingman. Anyway, so back to this. So overall stock market analysis, and you know what? Well, let's take a look at some of the headlines of the day here. Let's go over to uh, investors.com, IBD, see what they have to say. NASDAQ leads stock market gains on robust economic news. Okay, very different than what it was saying even just a few days ago back here. All right, if we come back to this and that, and that's part of it is the sign of how fast uh, things can change, right? So, like, if we're taking a look, let's say over here, right? IBD on this. Let's increase the size of this text so you could read it a bit better, right? So IBD tech stocks hit again as rates soar, oil plunges. Market Watch says that stocks end mostly lower. Weak start as investors are looking at Ukraine. So all this, right? And then over here, just how many days later, now all of a sudden the economic news is fantastic, right? Um, so there's something to be said, I feel, for just paying attention to the market and the market's action, right? Here's a look um, at Market Watch. Dow surges 250 points as investors assess Russia's ongoing Ukraine invasion and latest Fed commentary. It's basically just telling us, what's already happened, right? Like, well, with Russia ongoing Ukraine invasion, okay, and the Dow happens to be up, right? So take a look at the Dow, right? Dow happens to be up, okay. Well, what's really happening is the market bottomed. It found a low over here, and now it's consolidating. And so far, it's consolidating constructively. Looks like we've got a comment in here. Caleb's in the house. Welcome, Caleb. Um, so market marches up off the lows and is in a spot now where, uh, for me, it's where I'm in a spot where if setups, if I start to see, or if I continue to see quality setups, then I would be increasing my size at this point. And the reason why is because I like to think of the market in like color stages, right? Like just like you're at a traffic light, like green, yellow, and red. And well, when it's green, all systems are go. You have a nice straightaway. Everything seems to be working. The traffic's flowing nice and smoothly. Well, when it's a yellow light, you start to slow down. You're proceeding with caution. When it's red, you're at a either at a dead stop, or like you're just kind of like rolling, inching forward, right? Like you're in heavy traffic, bumper to bumper. Um, at this stage, we're proceeding with caution, right? The yellow condition. So, what causes that yellow condition? Um, well, for me, it's this multi-time frame analysis on the indexes, right? So, coming over to this and looking at the major indexes, here's monthly charts of the five major indexes, and I also throw the the IBD 50 up here. I like to keep that there just for perspective. A lot of growth stocks are in that ETF. So here, the, on each of them really, on each of the indexes on this monthly time frame, they're all consolidating sideways at this point. They stopped going down in February, and each of them have put in inside months so far, and we're getting closer and closer to the end of March. And not only that, some of them, like the S&P 500, is above its 12-month moving average now. So that's another positive sign here. Whereas some of the other ones, well, the NYSE has done the same thing. The other ones are still below the 12-month moving average, so they've got a little bit more to go. But it's becoming more constructive. Here's the weeklies. On the weeklies, the Dow actually confirmed, not the Dow, I'm sorry, the S&P 500 actually confirmed its uptrend by stopping here and then following through and pushing through not just the 10-week line, that red line, but the 40-week as well. Same thing, or similarly on the other ones, you're pushing higher across the board, but each of the other ones are still contending with that 40-week line or around that general area. So they have more work to do. Over to the dailies, and let me take all those annotations off the help it. To me and to our members, it makes a lot of sense, all those annotations. But to you guys, if you don't know, then it just looks like, oh my God, this guy has a million things on his charts. Anyway, so yeah, with this here, the S&P 500's in a confirmed uptrend. It broke above resistance back here, followed through, broke above its 50-day moving average, continued to follow through up above the 200, and then it pulled back slightly, and then it's consolidating here today. And that's while the other indexes are all consolidating around uh, different points of price structure that make sense relative to themselves, right? So, for example, over here on the Russell, right? Let's make the Russell a little bit bigger, right? So where did price stop? Price stopped right here. And you look to the left and you see, well, what areas does this tend to make sense? Well, you have a prior peak right here. That makes sense where price stopped. And then that peak is very close to these lows over here, right? And that's why it develops the support and resistance. So as price rallies over here, this is a natural spot where price should pause. And so, well, when it starts to pull back, it's pulling back in a constructive way, right? Like it's not like this, right? Or this down here, we have this very wide and loose and erratic sudden moves. It's far less volatile. It's coming down nice and quietly around here. So character change doesn't mean that the market's going to take off here. We don't know that yet, but it's a sign that things are changing and we should be prepared. Any questions on that or thoughts? All right. So let's talk about it. And we actually jumped into the trend analysis across the board. Let's talk about the sector leaders, sectors, industry groups, individual stocks that are leading the way. Transports have been continuing to lead. Here's MATX again. This position was started back here a couple of weeks ago. Put my annotations back on. I bought it out of this little consolidation as it broke out and gapped up, and it's came in a little bit today, and so far it is had a very nice positive reversal on the day, and that's the kind of action that you'd want to see when you're in a stock, right? Like we don't necessarily want to choke off a trade when we're in it, but we want to uh, give it enough room so where it can fluctuate. Uh, not stop us out prematurely, uh, but give it the chance to have a move like this, right? Because if you're looking at this individual bar here, and let me take the annotations off for a second. At one point during this day, this was down uh, right around the 10 EMA, right? And it would have looked horrible. Let's take a look at a 30-minute time frame so you could have a better look at this. So at one point, price was all the way down here, right? Looking horrendous. We don't want to get shaken out uh, on a move like that. And it's one of the reasons why uh, figuring out proper stop placement is so important. And it's one of the things that we continue to focus on inside the elite mentorship program. And it's a hot topic here too. Let's see. Uh, Ugans is asking about an option on TMC earnings today. Do you mean AMC? TMC. I'm not familiar with TMC. Let's see. Oh, the metals company. Let's see. Is it earnings? Oh, yeah. Look at that. Okay. Well, right off the bat, I'll tell you that this isn't the type of stock that I would trade. The reason why is because right now it's in this sustained downtrend. Like, yes, it did come off the lows here. What was that? A couple of maybe 2 weeks ago, and it rallied hard off of those lows. But it's still like it's rallying. Let's measure this, right? So it rallied about 100%, close to it, about 90% in 2 weeks over here. But that's after having declined 92%, right? So that it still has a lot of overhead over here. So it's not the type of stock that I would trade, but that doesn't mean that we can't talk about it, and that I think that it's that I have any other opinion on it. It's just not the kind of stock that I would trade myself. That said, um, you know, talking about an option on earnings today. Well, uh, what I'll give you this. The One of the ways that I like to trade earnings, if I am going to trade earnings, is to use it with options. And when I am going to use options, right? So let's say I'm bullish on this idea, then I would buy a call, out of the money call at the strike where I think the pivot is, right? So not where I think that it's going to go, right? So let's say I'm incredibly bullish on this, and I think that it's going to go from $2 up to five, let's say, right? Like shooting for the moon here. I wouldn't buy a $5 call. What I would do is I would look for the pivot area. So maybe I'm buying a $2 call, right? Just above today's high. Or maybe I'm going back 2 days over here, right? And I'm buying a $2.50 call. Um, and I would be looking to do it maybe about a month out to try to give myself a little bit of time value in there. But all of that said, you have to have a liquid options market in order to trade that strategy. So how do you know if you have a liquid options market? A very simple way is to see what contracts are being offered, and to take a look at the difference between the bid and the ask, the spread between the bid and the ask. If it's more than say 10 cents or even 20 cents, depending on the price of the contract, it's going to be illiquid, not liquid enough. So you might be caught in a situation where price moves in your favor and the option doesn't move along with it. That I speak from experience on that one. That sucks when that happens. So don't fall into that trap. Check to see if the options on this idea are liquid, and then if they are, then you might want to think about how you're going to go about executing it. But again, uh, it's not the kind of uh, stock or strategy that I would use. One, it's too low priced. I'm only trading things that are like my cutoff is $5 a share. Most of what I'm trading, right? Like so, let's go back over to my open trades over here. So um, yeah, you can see that most of them are in the $100, $200 range. This one here is 35. That's on the lower side. So um, there's that, and this is also it hasn't established a stage two uptrend, and that's a whole other conversation to get into of like, well, what is a stage two uptrend, right? Basically, we want the stock to be in an uptrend like this, then consolidate, and then look to get in as it continues, right? Like, I don't want to be buying down here because price could just stay down here in this range for a very long time. That's it in a nutshell. But uh, yeah, good question. Yeah, no, yeah, Gans, if you are interested in subscribing, what I would recommend that you do actually, if you're not already on it, is to hop onto the newsletter. Right. So let me find the newsletter banner over here. Here's the link for the newsletter, marrowwealth.com/newsletter. So go on there and you'll get a free email from me once a week with the ideas that I'm looking at, explanation of why, right? Like that's the more important thing. It's not about just getting some random stock idea from someone you found on the internet. It's about giving the idea and the thought and the rationale behind the idea, so that way you start to understand the process. And there's other educational information in there, videos, earnings announcements, important earnings announcements, a variety of stuff. So go hop onto the free newsletter, start there. Let's see, well, what other questions do we have? Yeah, let's open this up to the open Q&A. What other questions do you guys have? Here's another idea, right? Like so with crypto, a lot in crypto land had started to go. So I started a fresh position in Bitcoin a few days ago after it had put in these lows, saw it consolidating, right? So here's what I'm talking about, right? So Bitcoin, another one, right? Like so you see how this is similar to or it it too like had like a pretty steep consolidation here, right? So consolidated 50%. Okay, so it's starting to make the turn over here. It's starting to make the turn, come off the lows, and you see like the change in the volume character, right? So over here, that's the most recent low back in January, right? Of this downtrend. That's the low, and you see how volume comes in very heavy. The highest volume that this has had, um, about the same as this level over here, maybe a touch higher, but the most that volume in about a year, and then price rallies, price pulls back, and then again, it price the rallies over here and you had that big volume spike, that's confirming that it's confirming this low, right? Like it's following through, right? It's showing that there's some big buyers down here. So what I'm looking for is as this consolidates and continues to tighten up, I want to start to build a position here. So price runs up, pulls back, and then you see how tight this gets, right? Like see how tight this section is over here relative to how it was trading back here. That's what you really want to look for. That's what like what Mark Minervini talks about as a volatility contraction pattern, right? Like that, this might not be a perfect VCP, but it's VCP action, volatility contraction pattern, where price just goes from wide and loose to getting progressively tighter on this right side, and you start to see the volume dry up over here, and then even over here, right? Volume ticks up slightly as price starts to come out over here, and so far it's following through. And here's another key point with crypto, and this is something that's akin to stocks as well. So with crypto, well, when crypto starts to move, it tends to move together, right? So if Bitcoin were only moving by itself, I would be very suspect of it. But it's not just Bitcoin. You have Ethereum making a similar move. Litecoin started to make a similar move. Even Doge popping out. Ethereum Classic has just been on fire, right? Uh, it since it made the turn, up 72% in 5 days, right? So all the making that turn off the lows. So that's what you want to look for. That's what I like to see. Question from Caleb: do you think Builder is broken? Let's take a look at Builder. BLDR. It's not viable right now. Uh, it's in a stage three, right? So Caleb, you're familiar with stage analysis, right? So this being stage two, and then this going into stage three, right? Like, well, when it's consolidating this way. And so what we'd be looking for is for this to either break out and continue, or break down and begin a stage four decline. But given where price is at right now, it's pointing more towards stage four than it is going back into stage two. This wide and loose action, the declining 10-week line over here, and the relative strength line doesn't look too healthy either. It's not. Well, like at this stage, I think that it needs some more time to sort things out. Um, I think the best case for it right now is that it sits in this box that it's made. Yeah, Ugans, well, with some insights for the channel. Yeah, all that. I agree. Let me know. Type into the chat too if that strategy works with live streams. Right? Like it's definitely something that I look to do with with video uploads. But if it works for live streams too, I'll test that out. Thank you for the idea. Let's see. Any other questions? Let's see. Caleb, Beamstock's not really the bag here. Want to learn to trade? Stick around. I've been following Mara for a while. He's very knowledgeable and will teach you how to fish. Oh, thanks, Caleb. Yes, that's one of the big goals that we have. Like it's not about handing out ideas. It's really about the understanding and learning process, right? Like that's the thing. That's how you become self-reliant, and you can find this stuff on your own. Um, but any other questions, or maybe we'll wrap things up. How about you guys over here in Share Vision? I see a bunch of you sitting there. Let me know what you have going on here. All right, no questions from Share Vision. All right, so we'll wrap things up. Oh, let's see. The Caleb, I fished for Builder though. It fell off the line. um, yeah. So now, Caleb, well, when did you get into this? Right. So maybe I could help you out a bit more here. Well, how did you get into this, and what was the basic idea? Right. There's multiple danger signals in it right now too, right? Like so, with the stochastics starting to curve down over here, that shows a loss of momentum. Um, your moving averages flattening out, curving down as well, trading below the 50, now the 100, the relative strength line, weak over the past 7 days, weaker over the past 50 days here. Um, so there's all it's all that. Um, Not sure what the group ranking is, but that's something to pay attention to as well. The sector and the group rank. So got in at 74 earlier this week. So like somewhere in this area here. Yeah, so the idea, like, well, if we're ever shaken out of a stock, something that has been very helpful for me, and that this used to, like, I used to be in a similar boat. Like, I remember, like reading O'Neill's book, and there was a section that said that if you get shaken out of a stock and it comes back, to go in and to buy a little bit more. And so I used to think that, okay, let me, yeah, like let's say I get that I bought right here, right, and it comes in and it shakes me out below the 50, and then it comes right back through that area here, right. So let's get rid of this. Let's leave that there for a second, right? Let's say that this is our line in the sand right here, where we want to do our buying, right? Make that a bright green. So let's say over here that I'm like, okay, I'm gonna buy this, right? Price is getting above the 50, and I buy it, right? And then price comes in and it shakes me out down here, and I sell for a loss. And it's just like, okay, I'll buy it again if it crosses above the green line, and it crosses above it right here. And so I buy back in with a little bit more, and then I get shaken out again, right? And it keeps on doing this. Eventually that those 7-8% losses rack up, and it hurts a lot. So, uh, what and that was a lesson that I learned the hard way. So what I decided to do instead was that if I'm buying properly, right, and so there's a lot in just in that phrase, right? Buying properly. But if I am buying properly and I get shaken out, then I'll wait for a fresh setup, right? Like so, if I let's just say that this is a fresh setup, right? Like the buying right here. If I'm shaken out there, then I'm waiting for a brand new setup to emerge. In order to buy, like, I'm not buying this just because it's coming back through a level that I bought before, if that makes sense. And then, and part of that too is that we're not just waiting for a proper entry point. Well, we're constantly assessing all the setups that the market is offering, and then buying the best one, right? And having a minimum criteria of what we'll even buy. So that way we're only buying the best of the best. And if the best of the best doesn't work, then okay, fine. But if we're buying mediocre setups in subpar sectors, and it doesn't work, and then we're just trying to have volume, that's where we just have like a lot of garbage. And we want to avoid that. We want to trade less but trade higher quality, and it helps the bank account. It helps your personal psyche, all that. So let's see a bunch of other comments in here. um Ego. Ooh, ego got in the way. I didn't want to be wrong, so I bought it back to get money back. Yeah, that's a common problem. The ego trade. So if we're focused on profits, then well, we could really only focus on one thing at a time, right? And this is a major point. We could only focus on one thing at a time. You might say that, well, that's ridiculous. I'm multitasking all the time. That's true, but you're really only focusing on one thing at a time, and you're doing a bunch of other things, right? So if you are focused on P&L, then you're not focused on process. So the more that we can give process our attention, the better the results that it's ultimately going to yield. So um, also wrapped up in wanting to be right is the question of, well, one, why is that? And two, like, well, what's our objective, right? Like, is the objective to be right, or is the objective to make money? It's kind of sounds like, well, it should be the same, right? Because if I'm right, I should be making money. That makes logical sense, but. Uh, and Caleb, you know this very well too. You don't need a 100% batting average. You don't need a 70% batting average. You could do extremely well with a 50% batting average. And hell, my batting average is 45% overall, and so is Stu's. Both of us had 75% gains last year. Right? Like, so you don't need to have very high batting average. What you need is small losses, large wins. And you get that by focusing on process and by going for just the high quality trades. And that's it. And not trying to get something back. And to not go for the revenge trade, right? Like only quality setups. Only quality setups. Yeah. So, anywho, think we'll wrap things up now. Got about 10 minutes over. So anyway, great chat. If you, for anybody that's here that's watching, if you happen to be in the New York area, on Saturday I'm hosting an in-person meetup here. Well, why don't I show you the meetup site over here? So bring that back up. So it's right over here, the uh, Long Island Investors and Traders StockTwits meetup. So I'm hosting this. It's going to be in Amityville. It starts at 2 o'clock. So come to meetup.com, come here and register for this. We've got a bunch of people coming already. And I'll see you on Saturday if you're in the area. I'd love to meet you in person. StockTwits is sponsoring it and is footing the bill for the happy hour afterwards. So like food and drinks and all that stuff. So pretty cool. But yeah, that's it for now. So I look forward to seeing you guys, and take care, everybody. Peace out.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.